How is this impacting the outlook for 2025 when you think about European markets?
Well, I think what we're seeing is really a continuation of what we've seen for the past couple of years, right, where we're seeing weaker industrial manufacturing PMIs, relatively resilient service PMIs, but still at an absolutely low level across most of the, I guess, northern European markets. Spain, actually the outlier today, coming in sort of 56, 57. So the economy there doing relatively better, but we're continuing to see a pretty sluggish overall outlook. Whether or not that matters that much for the individual stocks within the market, I think is a debating point. But certainly from that sort of macroeconomic perspective, I think it continues to remain pretty soft.
What will be the event, the thing you would highlight when you think about European markets in 2025?
Well, the things that I think really matter actually are probably less about the domestic macroeconomic picture. I think that matters for confidence. It matters for people like me to be able to sit in front of clients and tell them why we're putting their money to work in Europe. It always helps to have a comforting macroeconomic backdrop. But I'm not sure that actually matters that much in terms of returns. I mean, if you go back to last year, the best performing market in Europe pretty much was Germany, despite the fact that the economy was terrible. And that's because SAP is performing extremely well, which has very little to do with the domestic German economy. On the other hand, France, similar macroeconomic performance, much weaker stock market returns, primarily because of the Chinese exposure to their luxury goods companies and their consumer parts of the market, which was very weak. So I think you've really got to get in at the company level to understand the different country level market returns.
Interesting. Before we carry on, I just want to show our viewers how US futures are shaping up at the moment. Of course, we still have a couple of hours to go before a US stock starts trading. Nonetheless, though, I want to put things into context. At the moment, futures we have suggest it could be a positive start to the trading day on Wall Street. I want to show you how we moved on Friday, because we were higher across the three major indices. We have the numbers on your screen at the moment. And of course, today, this week overall, is a very important one for US equities. We have a lot of data coming through. So, Ben, one of the highlights is no doubt the jobs report on Friday. What I would like to understand here is whether we are too optimistic at this stage when you think about US equities, and perhaps some of the data that we might get this week is actually shake that a little bit.
Yeah, I think the data is going to play part of the story in 2025. Certainly, we've seen a big repricing in terms of the amount of interest rate cuts that are expected to come through, right? I think we're looking for one in the market now. In 2025, we were probably 3 or 4 just 5-6 weeks ago. So there's been a big shift there. I think we'll continue to see a relatively resilient economy. But I think it's all, again, I think going to be about the performance of the individual companies and whether they're able to continue to both drive the underlying earnings and sales performance, but also I think the narrative that continues. And that's been the piece that's been so important for driving US equities ahead in 24, 23. And again, I think, are they able to maintain that focus and attention from investors by being able to keep the story primarily of technology development on the front foot in the year ahead?